You're live. Good morning. Yo, you're live. Good morning, good morning. It's a new day. It's a go day. We are live. We're live. Good morning. Trust we had splendid night rest. Trust our week went well. Invite friends. We're live. We're live. We're live. We're live. We're live. Good morning. It's a new week. We trust God that this week is going to be profitable much more than it was last week. If you're joining, let's know your name and where you're joining from. Okay, good morning. Good morning, Mr. Idris. Your name and where you're joining us from. Your name and where you're joining us from. So, as our custom is, I'm going to play our affirmation for the three next 3 minutes. Right. I'm going to play our affirmation for the next 3 minutes. Yep. If you can hear the voice, please indicate I can hear. If you can hear the voice playing in the background, indicate I can
I
hear.
am a skilled day trader.
If you can hear the voice, indicate I can hear the voice.
I take day trading seriously and I'm a master of it. I have a fine-tuned sense for knowing when to enter and exit trades. I always take smart and calculated risks.
All right.
I only take smart and calculated risks. I know when to be patient and when to act on my trades. I am constantly improving my day trading knowledge. I easily adapt to new trends and shifts in the market. My mind is highly aware and focused at all times. I am 100% present when I am day trading. I keep a positive mental attitude no matter what. I live and breathe the markets. I love day trading. I have strong intuition for when to make great trades. Being a highly successful day trader is the norm for me. Making loads of money day trading is easy for me. I enjoy the process of developing my day trading knowledge. I continue to press on towards my vision and goals, no matter what setbacks may occur. I am naturally persistent and tenacious. Making money day trading the markets is just a normal part of my life. Money and profits are automatically drawn to me as a result of day trading well and consistently. I take full responsibility for my actions and my trades. No matter what my day trading results are, I learn and grow from them. My focus is entirely on the process of day trading and not on any particular outcome. I make money day trading every day. I am a profitable and masterful day trader. I become wealthy due to my day trading. I am a highly successful day trader. I am a skilled day trader. I take day trading seriously and I am a master of it. I have a fine-tuned sense for knowing when to enter and exit trades.
I have a fine-tuned sense of knowing when to enter and exit trades. I have a fine-tuned sense. Let's write it out in chat box. Okay. I have a fine-tuned sense of knowing when to enter and exit trades. Very important. I have a fine-tuned sense of knowing when to enter and exit trades. I have a fine-tuned sense of knowing when to enter and exit trades. I have a fine-tuned sense of knowing when to enter and exit trades, because confirmation is the last process of your DLC: direction, location, confirmation. So confirmation is knowing when to enter and exit, right? The most important is direction, because without direction there is no trade. After direction, so direction is what? Direction, I sent that to the group this morning, right? Direction answers the question what. Direction equals what, right? Location equals when. So when am I going to join the train of buyers or sellers? While confirmation is what? Is when. So we are saying in the affirmation that we have a fine-tuned sense of knowing when to enter and exit trades. That is your affirmation. This, okay, it's part of the affirmations. I have a fine-tuned sense. Like I always say to us, even if right now you don't have the skill, it all starts with your affirmation, your mindset, your habits. That is the foundation of your success. When you don't have the skill set, the first thing is you put yourself in that zone. Okay, so the more you say it to yourself, the more you're attracting the skills, the people that will teach you how to achieve that goal. All right. So the best time to speak these things is when it's not yet manifesting. Right. The best time to say I am a successful trader is when you're not yet successful. The best time to say I am a billionaire is when you are not yet a billionaire. The best time to say I am a confident and skilled trader is the time you are not yet even showing a shade of skill or confidence. Right? So very important. Second announcement I'm making today is the 7 of 100 days, and the first 1 to 20 days. Who can tell me what we are doing for the first 1 to 20 days? Who can tell me what we are doing for the first 1 to 20 days? The foundation phase. What are we doing for the first 1 to 20 days? There are three things. For the first one, let me know those that are following on this journey. What are we doing for the first 1 to 20 days? What are we doing for the first 1 to 20 days? Right, I want the response before you go to the chat. Very quick, very quick, very quick. Great. Thank you, Mr. Abbott. Goal setting, routine building, and strategy development. Goal setting, routine building. So, and I told us that by this time we should have known our goal. What do I want to achieve in these 100 days? You should have known it by now. By this time, you should have built a routine. If you have not built a routine, I'll send a template for a routine of a day trade. I'll send it to us. You can now implement and innovate. By this time, you should have started knowing, okay, what strategy am I going to be using for the next 100 days? Very important. And I sent a book on goal setting. I sent videos for us to watch on personal development, right? And I believe that we are reading these books and watching these videos. If you have started reading the book, let me see. If you have started reading the book on goals that I sent to us in Signify, if you have started watching the videos, I'm going to send another five video again this week. I sent five last week. I'll send another five again this week, right? And of course, our strategy is DLC, is a model. So direction, location, confirmation. So if you don't have a strategy before, you will learn what we are using and you will develop it. All right. So let me know if you have started reading the book, indicate. If you have not, I have not. Just let me know a show of hands. Because this is real business. We are really mean business. All right. So while I'm expecting those show of hands, for our quote today says routine in an intelligent man is a sign of ambition. Routine in an intelligent man is a sign of ambition. So we are in the week of building routines, right? So routine is very important. That means you must have a particular thing you are doing. Okay, please read the book. It's very important. You can just do one chapter per day. That's 21 chapters. You can just do 10 pages of or one chapter. Just do something. It's gonna really change your mind. I promise you. Right? So routine is very powerful when it comes to achieving great things or ambitions. That means you want to know, for example, now once it's 5 o'clock, I wake, 5:30, I meditate, 5:45, I exercise for like 15 minutes, 6 o'clock, I'm doing my chat. So you must have a routine and it's going to be consistent every single day. It's not easy, but it's worth it. So the more you show up, the more you become consistent, the more you begin to adapt. But at first, you might miss some days, some routines. It's fine. Don't beat yourself. Okay, you might miss some days, but when you miss any day, get back up. Don't now say, ah, okay, I've missed it. I've no. It's a journey. It's a process. Okay, now so let's go to the chat. So confirm if you can see my screen. It's a new week. Very, very productive. So you can see my screen. I believe you can see my screen now. Right. So I already sent us on, was it not Sunday or Saturday? I already sent us the view of EURUSD from weekly to daily to 15 minutes. Right. I already sent us the view for EURUSD from weekly to daily to 15 minutes. So let's go over it again. Let's go over it again. Let's go over it again very briefly. Very briefly. Okay, we don't have much time. All right. So Now let me adjust my Asian range since Asian has already opened. So this is my Asian range here. Adjusted it. Good. So for our sake, I'm going to cancel everything. Just start again. Going to remove all the joints. So we start from weekly, right? We go from weekly to daily to 4 hours and 15 minutes, right? These are that's the time frame we're going to use. So from weekly time frame, let's do a top-down analysis. Pay attention, guys. We just need the recent price action. We don't need to go as far as back. So we notice that this is giving us, look at this trend. This is clearly an uptrend, right? Recent market structure. Now, among those 6 rules I gave us, I said number one, read to brick of structure, the recent brick of structure, right? Number three, the origin of the BOS. Are going to expect price to go up to the origin, then wait for the confirmation, location, blah blah blah. Now, what's the recent brick of structure here? It is this guy. So this is the recent brick of structure. So let me label it for us. I have my low here. Um, I have my low. I have my high. I have my higher low, HL. Then I have my higher high. Very simple. Very simple. With time, you yourself will be able to identify these things. It just takes practice, right? It just takes practice to recognize this. It's very, very simple. Low, high, higher low, higher high. Once I have a higher high, it means that there's a break of structure. And mind you, from the high to the higher low is the box. Before the break of structure, everything here was internal structure until it now broke out, right? So before the break of structure, from this high to this low, for this higher low, everything was internal before it now broke out. So it broke out of the box. She, when we broke out of the box, what do we expect? A retracement into what the origin, right? Now let's take off this. We have a break of structure now. So I just need to know my recent break of structure. So this is what I'm dealing with. So high, higher low, higher high. So now our range is now between this higher low and this higher high. Let's be clear. Let's take it step by step. Right? Our range is between what this higher low and this higher high. And for us to know the retracement level when a range happens, what do we use? Fibonacci retracement tool. The moment we have a break of structure and price begins to pull back, I come again. When we have a break of structure, right, and price begin to pull back, we draw out our what Fibonacci tool from the higher low towards higher high, so that we can know where we are buying from. We can know the location, which is either 50% equilibrium or the discount levels. Clear? So let's draw out our fib from higher low towards higher high, and that's what we have. So I first drew out my 50%. I want to know where the equilibrium is. I want to know first where the equilibrium is. So when I did that, I realized that okay, this is the equilibrium, and last week already closed below the equilibrium. Right? This is the 50% equilibrium. And we realized that last week I already closed below. So, and I said that our business from buying is either at equilibrium or it comes down to what, a discount. So let's look at where the discount is resting on. Our 71 to 100. 71% starts from here to 100% down. I just extend a bit. Right? We need to set our locations even before it gets there. Right? It means that these are the two places I have business buying from. Now, price is currently inside our equilibrium and has broken inside, heading towards our demand. Now, once I've done this, I now go to a lower time frame to now know my confirmation, location confirmation. So let's go to daily time frame, a time frame lower. All right, a time frame what, lower. Look at what's happening here. This is my range, higher low, higher high. Right, that's pulled back into 50% and that's broken inside. Now the question is, if I want to now see a buy from this 50%, I need to see a change of trend because now price is in my location already. For me to see a buy, there must be a change of trend in the lower time frame. That means if I go to my 15 minutes now, this drop you are seeing will form a structure, right? On 15 minutes, I will see a structure like this. When it now gets to my equilibrium, for me to buy, I must see that this lower high is taken out. That's one. Then it comes back to my zone and I take the buy. If I don't see this, I don't enter. This is my confirmation. So on the 15 minutes, my confirmation for a buy would be a change of trend from bearish to bullish. If I want this bearish to continue selling, I will see a break of structure continuing to the downside. All right. So for me to say that this sell will continue going down, I want to say what? A break of structure. So that means two things now. Change of trend is used, I've said it before, for reversal, right? Break of structure is used for continuation. It's as simple as that. There's nothing again. For me to reverse from a sell to a buy, I must see a change of trend. For me to continue the sell or the buy, I must see a break of structure. For me to reverse from a sell to a buy, I must see a change of trend. For me to continue a sell or a buy, I must see a break of structure. Now let's go to our words. Now, okay, on still daily time frame, all right, I'm going to refine my daily time frame to an order block, which is called bullish order block. In the mentorship, I've explained that. I can't explain that in the class here, right? So if you want to know more about this concept, mentorship. So yeah, I'm going to refine my daily time frame to this order block, right? That means price still likely might get down to this place, and there's a liquidity resting here, a sell side liquidity resting here. This is a sell side liquidity resting here. Okay, so it's more likely that price might also want to drop down, but we don't want to interpret. We don't want to predict. We just follow price and follow, is it break of structure or change of trend on lower time frame. After doing this, I want to also mark my, I'm on daily time frame. I would also mark my daily previous daily candle, right? Because I'm on daily. Let's just do it once and for all. Since I'm on daily, let's just do it what, once and for all. Now the daily candle close what, bearish. Look at, on Friday we close bearish, right? So what do? We mark our what, our low and close, right? It's already seeming today's going to sell. I'm already perceiving the sell. I'm perceiving the sell. I'm perceiving the sell. But let's not conclude. All right, because the sell is very strong. The sellers are pulling the pressure strong. The sellers are pulling the pressure so strong. So this pressure for the sell is strong. There's a magnet here. This liquidity is a magnet. All right. Price always head or trace towards liquidity zones. It's a pool. It's a pool. So it's likely that price drops to this liquidity, but we need to see a confirmation. Do you understand? So let's go to our 15 minutes for our confirmation now. Right? New York open for previous day to New York close for Monday. Good. Now look at what we have currently on 15 minutes. The structure we currently have, I sent this to the group. If you can remember, if you can, you see this same structure, on the group. This is our lower high, lower high. This is lower low. This same structure on the group, if you can recall well. Lower low. Okay, then we have just a premature lower high here. I call it premature. Premature lower high, then a lower low, right? So my men and my brethren. Now, currently, this is what we have currently. So to now add a spice, let's now mark our Asian high and Asian low. Because in the mouth of Asian range and previous daily candle, the daily bias is established. In the mouth of Asian range and previous daily candle, the daily bias is established. Looking at this chart now, for me to have a buy market for today, I must see a change of trend. I've said that before. For me to have a sell continuation, I must see a break of structure. So that means this is lower high, this is lower low. So I must see a now this is an internal trend. Everything here is what internal. So let me know that everything here is internal until it's what broken. Everything inside this box is what internal until it's broken either to the up or to the down. So inside this guy, we have this, okay, pull back into this premium, right? So for me to confirm my sell, I want to see a break of structure, yeah, then a reversal, a pullback, and I continue selling. For me to confirm my buy, I want to see a break out of this box, which will now be a change of trend from bearish to bullish, then a pullback and buy up. These are only two things that I want to see. So now, for early sellers, those that want to start selling early, I don't think no, there's nothing to do inside here to be safe. No need to rush. There is nothing to do inside here. Please, there is nothing to do. There will be so much manipulation because currently Asian law has not been manipulated yet. Okay, we've not seen manipulation from the Asian range. Right, we are still within the Asian range. We've not seen manipulation. Look at it carefully. We've not seen manipulation from the Asian range. So you could see a manipulation to take out Asian low, right, into this demand. Then we buy, right? You could see a manipulation to take out Asian high, and we come down to sell. So let's just wait. Let's wait for 8 o'clock one, and let's see how Asian manipulation is going to be. Right? Is that clear? Right? Is that clear? Is that clear? Is that clear? Let me see. Clear, 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 clear. If that's clear, if that's clear, if that's clear, why are the numbers reducing? Is it network or what? So talk to me. This week is full of news. Let's go to our first factory to so on forest factory we have news. So this forest factory, we need to always check our news release for the week. So it puts us in a better position to prepare. So Monday to Friday, I'm going to send a screenshot to us, the group. So Monday, no news. Tuesday, no news. Wednesday, we have news for NZD, for USD, and so on. Okay, let's take it from here. Monday to Friday. All right. It's as simple as that, guys. So on Wednesday, we are starting our physical class at the office. Come around. It's going to be very, very much insightful. Most especially those that can't afford the mentorship, right? It's an opportunity to learn what we also do. Okay. And please importantly invite friends that wants to also learn. Clear. All right. So for the class, physical class starting this Wednesday, I want to have us fill that room. I know at the beginning it might not be much, but it's fine. As time goes on, let it be it's going to be a culture, right? It's going to be a class. As long as until I get tired of holding the class, it's going to hold for the next 6 months, if not 1 year. Self. Let's just be holding the class. Because the goal is to build 1,000 community this year. I know it's done already, right? So, and I want to this is the structure I have on the plan. If I can build 10 people, I just need to raise 10 quality traders. Once I can do 10, that's all. So each of those 10 will bring their own 10. So it's called the power of 10, right? I just need to build 10 people that are very committed and very serious, that will think like me, that will act like me. 10 of my like minds. Once I build that 10, I can go and sleep in terms of raising the community because those 10 are the ones that will now, like me, raise their 10. And I'm very sure the 10 they will raise will be like them. You see now? So it's the power of 10. So if you want to be among those 10, right, send me a message or signify. No, don't do it here. Just if you are listening to me, I want to be among those 10. I just send me a message, right? So those 10, I need to work on them well. They'll be the one that would, just like the disciple of Jesus. It's just 12 people that turned the world upside down. Just 12. Although one was a trader, yes, but they became like Christ, so they could do what Christ did in Christ's stead. So that's the vision. Once I can build those 10%, I'm good to go. Right. So if you want to be among those 10 to push the vision, shoot me a DM. Right. So back to our charts. We are expecting now. I want to be very so. I want to be. I want to be disciplined to master. Of course, I will trade other pairs, but right now I'm solely focused on USD. I want to take it a pair at a time. So I'm going to do it this way for myself. This is my plan. Every quarter, every three months, I will pick a pair that I'm going to master in and out. Okay. So for the next 3 months, October, November, December, I want to master Euro USD. Like if they wake me up from sleep tonight and tell you what will this guy do with my bias, I can give my speculation. Not saying that I'm going to predict, but I've known the in and out, when it wakes up, when it sleeps, how it moves, and I have a relationship with the Euro USD. That's the plan. So please don't rush. You can make money from every pair. Even the gold, the US 30 is the same. Some traders just focus on US 30 alone. Some just do USD, some just do gold, some just do GU. So it's not about first the instrument or the pair. It's first about you. Do you understand? So write this down. The win rate you seek for, the holy grail you seek for, the hedge you seek for is in you. Three things I mentioned now. The win rate, the holy grail, the edge is in you. The win rate, holy grail, holy grail, and edge you seek for are in you. They are in you. The win rate, the holy grail, the edge you seek for in you. So it's about you, right? So you want to pick a pair and master for 3 months. Everybody under my tutelage will pick a pair to master for 3 months. So let it be that in a year, okay, I've now mastered. Okay, so if I do three, 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 in a year, I've mastered 4 pairs. That is all. You don't need, as a day trader, you don't need, you need just 1 to 3 pair max. Say max, you just need 1 to 3. If you have 1 pair and you have mastered it, good. 3 pairs, great. So that's the plan. Oh. So for me, my first 3 months is Euro USD for the next 3 months. Okay, now you might see one else that you're just doing by the side, but this Euro USD is your focus. That means you shouldn't miss opportunity. You can miss on other instruments, but if you have two instruments, like for example, I still do gold once in a while, but I'll be more focused on Euro USD, right? Like my focus, my energy is going to be put on Euro USD. Others will be secondary. If I want to do, I would like to do, but I must not. I can't do without Euro USD for the next 3 months. That's my point. So everyone here, or we don't know what instruments we want to do. Okay, if you don't know the instrument you want to do yet, I believe everyone here is not. We are not totally newbie again, so you should know the instrument that. Or if you don't know what to choose, right? I don't know. You do EOSD with me. If you don't know what to do, right? Do EOSD with us because that's the sweetest, simplest, stress-free pair ever. It's very easy, smooth going, no stress, no volatility, no curiosity. I'm waiting for us, Mr. Albert, Mr. Gabriel, Mr. Frank. One currency pair for the next 3 months. In a year, you'll have mastered 4 currency pairs. When I mean master, I mean master, not jack of all trades. When I mean master, I mean master. In the next 12 months, you'll have mastered 4 pairs. So don't rush. Don't master 2 pairs at once now. Do we get great USD? Don't master 2 pair at once now. Master one after the other. 3 months is enough time to master a pair. It's enough time. It's enough time. It's enough time. Waiting for others. I follow the trend. USD. Oshe, USD win. Oh. Right. So good. So every morning, every afternoon, every night, you are studying the price action. If you are not trading, you are studying. So today, how did USD move from Asia to London, from London to New York till it sleeps? He wakes up again, Asia to London, London to New York, it sleeps. Wakes again, you will master it. This is natural principle of life. You can't do something continuous for 3 months and your eye will not clear. Your eye will clear. Even those that just start safe. Mr. Gabriel, his eyes already clearing small small. How much when I do it for 3 months stretch? Every single trading day. E go clear. Do you understand? So it's very important. Yeah, so back to our chat. So we are just waiting, guys. We are just waiting for price action. We are waiting. Monday might not give us much. Okay, Monday might not give us much. And one thing about what what this thing will do for you, this thing you have decided what to do for you. Now, discipline in the sense that other people that are doing gold and you are starting, you see them making crazy pips. You now be say, so just wait. Everybody we eat. Everybody we eat from the market, right? Your turn will come. Don't say because gold is moving, you now want to go and go to gold. No, time for EUSD will come too. So that's the discipline that the forest will test you to. So if you truly are going to abide by EU for the next 3 months, there will be temptations to do other currency pairs because sometimes EU will be slow. EU will not give you what you want. But because you have said I want to do EU, just stick to it. There's a reward for sticking and being disciplined. There's a reward. Okay, so whilst we just so let's do DXY and we call it right because EUUSD DXY. DXY is the indicator for dollar, right? So let's do DXY and call it right for this morning. So let's also go back to the weekly, like we did for EU. Let's go back to the weekly. Now let's see. I send this to the group on DXY. You can remember, guys. I send this to the group. You can see how price. You can see the power of market structure. How price sat on the equilibrium to take it up. So I already saw that okay, that this was the break of I think on is it on 4 hours or on 1 hour where I marked the break of yeah I think it's on 4 hours 1 hour. So I marked the break of structure and said okay, look carefully, look carefully. This is the okay. This is the higher low and what higher high. And I said okay, let's do the 50%. Okay, I think this is where I marked it from. Yeah, good. So I think there's 1 hour. I think there's 1 hour. Yes. So look at I said okay, this is the break of structure, the higher low and higher high. And I said okay, two this is compulsory. Two places price is interested to buy from 50% equilibrium or what discount. It doesn't change, guys. It doesn't change. And look at where the XY bought from. Exactly at equilibrium. It doesn't change, guys. See now, all right. Price came pull back to what the 50% equilibrium. First touch, second touch, third touch, then boom. We didn't even need to you didn't even need to know what the needs will do. Just following market structure, that's why I said structure prevails. Market structure is king. It came back to 50% equilibrium and it has the right to buy from here. Is something wrong? I'm not showing my screen. Oh jeez. Wow. Network took the house. Okay, let me. Thank you. Okay, I have a question here. Network. Thank you so much. That was network. Okay, let me answer this question before I go to chat again. Mr. Albert says, please, when you type AUSD on TradingView, how do you know which one to choose? You choose anyone. There are different brokers, all right? There are different brokers, so you just choose anyone. So if I go to AUSD now, can you see my screen now? That was network. Sorry about that. Can you see my screen now? Okay, yeah, great. So if you come to AUSD, anyone, just anyone, anytime anyone, they are broke. They are different brokers, right? They are different brokers. Anyone, FX, FXCM, Capital.com, anyone. Well, one thing I will tell students is the broker that you are using to trade on your live account. Ensure that the price on this broker is similar to the price on your broker's feed, because every broker has different price that they give to the traders. So for example, if I'm on DXY now, this DXY is TVC. The current market price for TVC is on DXY is 102.493, right? 102.493. That's the CMP. 0.49 Vasha. So ensure that your own broker has a similar price close to the CMP, right? So what it does do is look for the broker on the trading view that has similar price to your broker for entry. The price won't be so different. Do you understand? Is that clear now? Is that clear? So it's about the price that broker delivers, because they have different prices. Is that clear? I believe that's clear. Right. Back to my chart. So this is DXY. So I was saying that market structure is king. I've said this over and over again. If you are buying, the two places we can, once you have done our Fibonacci, is 50% equilibrium or what discounts. So price has the right to buy from here, from the 50% equilibrium. That's the first location price will have the right to buy from, or the what, the discount. So how do you now know when to enter? When price gets to your what, equilibrium or discount? Wait for confirmation. Candlestick confirmation. Okay. When price gets to equilibrium is not enough for you to buy. Bam, no. Look at this guy now. When price goes to what, equilibrium, on lower time frame, they no burn the market where you see confirmation. Is structure. Look at, okay, let's look at careful, and it must align with the timing, the session of the trade. All right. Now look at this. Look at it now carefully. When price got here, it got here once, it broke out. This is a change of trend, safe. Very, very perfect. Look at. Let's do this together. We have been selling for meal, right? This is a sell. When price got here, what did you do? Change of trend, right? And it came back to what? The demand here. It now gave a bullish candle confirmation. This is it here. And we went up. Clean. This is not even this is even clean safe. It's not even hard. This lower high, lower low, higher high. That's change of trend. And I told you, when you see a change of trend, what do you do, guys? When you see a change of trend, you wait for it to come back to the origin or the demand, and that's where you now what, buy from. And that's what DXY did on Friday. So Asian high served as the liquidity of change of trend. Asian high, right? On Friday, Asian high served as the what? As the change of trend. Then it now pull back into this demand. Then for those that trade candlestick confirmation, you wait for a bullish candlestick to close above the equilibrium. Look at it now. After this bearish candlestick, what happened? This guy closed, and what? This is a confirmation. So even at 1 o'clock, before the news by 1:30, you're already on the trade. Imagine now 1 o'clock you enter buy if it is a tradable pair. By 1:50, 1:30, before you know it, boom. That's what happened to me in a USD. I entered before the news, like 30 minutes before the news. When news came out, within 15 minutes, fly out. Is DXY clear? Let me go to my charts. Is DXY clear? The change of trend, pull back and buy, because patterns will always repeat itself. Is that pattern of a change of trend? Patterns will always repeat itself. Change of trend, is it clear? Very clear. Change of trend is very clear. From a bearish to a bullish, change of trend is clear. I love it. I love it. My God. Location is equilibrium. When price gets to location, this is so powerful. This is so powerful. Because we need to repeat this every day till we get it. In this place now, we have direction, location, confirmation. Okay? Direction is a what? Market structure. It's so powerful, guys. It's so powerful. It's so powerful. It's so powerful. Direction is a what? Market structure. Read market structure, right? Let me reduce the number to 16. Yeah. Now in this case now, our location was what? Who can give me the answer? In this case, for this DXY, let me see my charts. In this case, our location was what? In this case, for this DXY, our location was what? Guys, talk to me. In that case, for DXY, our D was direction, which is the uptrend. You saw that. Now our location was what? No, now location can't be change of trend now. Location change of trend is confirmation. Change of trend is confirmation. Location can't be change of trend. Change of trend is the final thing we see. That's the confirmation. Location is where from. Abraham, reversal care. Our location is Fibonacci 50%. This is now price pull back to location 50% Fibonacci. I gave us the location concepts. Among location concepts, we have Fibonacci retracement, we have demand, we have supply, we have support, we have resistance. Location is retracement of 50%. That's where it pulled back to. Is it not clear? After direction, which is breakup of market structure, we pull back to a location, which is the Fibonacci 50%. When price now sat on the location, the last thing is now confirmation. When do we now enter? So that when is now the change of trend. First, or candlestick pattern, because change of location confirmation has two concepts. You can choose any of them. So change of trend or candlestick pattern. I've given us this note before now. Each of the models. This doesn't change. So I said location can either be 50% or discount. So in this case now, price didn't get to price didn't get to the demand, it didn't get to discount, but it got to the 50%. That's the location. uh Yes, candlestick is also confirmation. So we have two types of confirmation. If you are using a change of trend as confirmation, that means you are entering a pending order. If you are using candlestick as confirmation, you are entering instant order. That means once the candlestick close, bam, you enter that instant market. But if you are using change of trend as confirmation, that means when it has a change of trend, which it did here. So this is the tell. We had a break of structure, we have a change of trend, right? Then we now wait for a pullback. It was 71%. So that pullback now, you can choose to enter a buy limit or instant market with candlestick pattern. As it's pulling back to Fibonacci here now, you can choose to enter with either instant market or what, buy limits. Is that clear? So do you understand? So I hope that's clear. Yeah, 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 yeah. So let's go back to our let's wrap up. Let's wrap up. So what are we expecting today for DXY? What are we expecting today for DXY? Let's wrap up with that. So this Friday has happened already, so we don't need this again. Okay, delete all this and let's focus on today. So let's go back again to the drawing board. Weekly time frame, just like we did for USD. Let's delete everything here. Good. Last week was so bullish, right? So bullish. Okay. So although we expect more bullish, because now this means that for us to see this big candle forming bullish, that means the big boys has given us their footprints. This big bullish candle that closed last week is a footprint from the big boys, from the order. That means the order flow is now what, bullish. That's what this means. Imagine this 1 week candle. It consumed one, two, three, 4, 5, 6. So just this one candle has what consumed these other 5 candles. So it means the order flow is bullish. Now, for us to continue this bullish, there might just be a retracement back into this other block, then continue buying, or they can choose to continue buying from here. How do we know what to do? We go to lower time frame to now look at break of structure, change of trend, break of structure, change of trend. So on daily time frame now, we continue our routine of saying, okay, yes, a clear change of trend from daily. Can you see very clearly? This is a change of trend from daily, guys. Daily. This daily sell, higher high, change of trend, right? So we expect a pullback and a what, continuation. That's the expectation from structure. So let's mark our previous day high and close on daily. as we begin to wrap up this structure, Asian range, and all of that. Okay, I need to add my Asian indicator that's wiped off. Rob Minty. Okay, so I put my 1 o'clock to what? 9 p.m. 21 o'clock. So if the XY we sell, Euro we buy. That's the and I'm seeing a see that this is a very clear sell, right? So that means Euro USD should be having a buy. From what I'm seeing, it's clear. It's clear. It is clear that dollar wants to drop, right? But we need to see a confirmation. It is clear that dollar wants to drop. Okay, Asian high, Asian low, Asian high, Asian low, Asian high, Asian low. So for us to see a drop, what do we need to see, you guys? Break of structure and what continuation to down. Right, very simple. Okay, okay, that is what we want to see. This is a free because this is the Fibonacci. That is the Fibonacci, and my 50% is still very much above the structure, right? And this is the demand. So this is DXY, right? This is DXY. Break of structure. Is this break of structure? Yes. Break of structure. Then what? Retracement to 50% or what? Demand. Then you can choose to continue buying any further. So, but this has to happen. That has to happen. So, even USD might want to have a buy because of DXY, right? Because of DXY. You can see the same pattern too. Same pattern too. We are looking up to this place. We are looking up to the hill. We are looking up to the hill. Okay? We are looking up to the hill. So, but there is a demand zone that might be this demand. It might come to take, so it might come to liquidate all these cells first to now buy. So this might still happen. I'm just trying to look at the locations that possible place for a good buy. Okay, for a good buy, this is a demand of 15 minutes because this cell, this guy has not been liquidated yet. So we want to see this come here, right, and we shoot up, right. That's what we might want to see. Very important. Okay. Let me save this. So that'll be all, guys. Questions, 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 questions. Any question? Any question? 0.2 times 4 is 0.8. Okay. Screen again. Okay, let me check. Oh, all right. I'm sharing already. I'm sharing my screen now. It will come up. Has it come up now? Yeah, we're good. Okay, great. So yeah, so for you monitoring DXY to euro, DXY to euro, DXY to euro, DXY to euro. So that's what we have. So let's take note. So let's put our coordinate now for a buy. Okay, so let's do that now. So buy limit. Let's go. So buy limit order. Our coordinate for buy limit. Let's use our stop loss here is 5 pips. So we're gonna add three more. That's eight. Okay, good. So if you are buying, our buy limit order, I'm gonna write out the coordinate for us. Okay, I'm going to write out the coordinate for us. No issues. Right. So yeah. Oh. So buy limit order. Our entry price. Our entry price. Buy limit. Buy limit order. Entry price. Entry price is 1.0955. Stop loss. Our stop loss is 1 point. Stop loss price is 1.0947. And our take profits. Our take profits is 1.1019. And this is a 1 to 7 route to reward. 1 to 7 risk to reward. So these are our coordinates for a buy limit order. That means because how we know how we do our Asian range, the concept for trading Asian range is that for us to have a buy day, it means that if I have a consolidating Asian range, which we have now, we expect to see that Asian low will be taken into demand and buy. This is the concept of Asian range. So currently, what do we have? We currently have Asian range, right? Then Asia low taking towards demand and what buy. That's the concept of trading Asian range. It's as simple as that. So let me reduce to 0.4, right? My entry is what's 1.955. Stop loss 1.0947. Take profits 1.1019. I'm in, guys. So my take profit there is, yeah, not bad. Okay. So on 1 hour, because you see that on 1 hour, there is a demand zone on 1 hour that is very clear, a rally based job on 1 hour. Look at it carefully. See 1 hour. Look at 1 hour. There's a rally based job demand zone. Can you see this rally based job? Although I think it has mitigated. Has it been mitigated? Let's draw a box. Okay, that's where price is coming to actually. That's the overall. So you can put your first pending order at that particular. Okay, yeah, good. So let's that one will be giving us 12 pips. So the second buy limit, which is the early one, the earlier one. Let me give you an earlier buy limit entry. So for the early entry, entry price, early entry price is going to be 1.0961, right? Why stop loss is going to be 1.0948, and take profits is same. TP is the same. Okay, TP is going to be, let's take it up a bit. Let's be safe. Let's be safe here. Okay, 1.10200. 1.1020. This is the early entry. Okay, this is early buy, the later buy. So this one now, only price gets in now, it gets triggered at that demand zone, drop base rally, that demand zone. Our stop loss is below 12 pips. Okay, this is a protected low that we don't expect price to cross over. All right. So that's it, guys. So let's take off this. Okay, so let's wait, and it is below our Asian low. So you get the first demand below our Asian low. That's it. Can you see it covered all these red candles, alright, and it broke out. So that is the first area of value below our Asian low. Okay, that's the first area of value below our Asian low. That's the first area of value below our Asian low. All right, that's the first area of value below our Asian low. All right, so our entry has been tapped in. Our entry has been tapped in. Price has triggered the first entry. Okay, price has triggered the first entry. So we observe our stop loss is 1.0 1.0482. That's our stop loss, 1.0482 at 12 pips. Yeah, 1.048686. Yeah. Right. So let's observe. Let's observe how price reacts. Okay, it's already inside our first entry. Inside our first entry, we see if it's going to respect this, or it's going to respect, or it's going to break structure. So we observe. Right. So looking at DXY, what is DXY doing? Okay, DXY has gone back. Why we have, so most likely DXY wants to take out Asian high. So the same thing happens too for the sell. If you want to Asian range this way, we have our Asian range this way. So what we want to see is we want to see middle line takeoff, I taking out into supply levels and sell. So likely here, we can see that there is a supply level sitting above here, DXY, right? So we are just following what price is doing. We are not we are not magicians. DXY, Asian I taking into what area of supply to what to sell. All right, that's what we can see here. So we trade what we see. Remember, we trade what we see, not what we think or what we feel. We trade what we see, not what we think nor what we feel. Yep. Right, all right, all right, all right. Right, all right, all right, all right. Is that clear, guys? Let's Yeah, so we have to end the stream now. We have to end the stream now. So any question? I think I'm good. Any question? Any question? Any question, guys? What is it saying now? So go to settings now. Settings. Mr. Gabriel, if you're using your phone or it's an iPhone, to change from demo to live, go to settings. Then you click on the live. Right. So it's already on. The market is already on. So if you want to enter now, you have to use instant order to enter. Right. The buy is already on for DX for EU. Yes. So enter. 0.01. Enter. Put stop loss We have the price. I've given us the price already. I've given us the price coordinates. 0.01. I've given us the price coordinates. Stop loss. When you enter, your stop loss is below here. 1.0948. That's the stop loss. If you're entering now, the stop loss is going to be below this low. That's 1.0, yeah, 1.0948. That's your stop loss. Okay, because we are already in the demand zone. We're in the demand zone. So all right, it's the demand zone already. Confidence, guys. Confidence. Oh, it takes a lot of confidence to do this. Confidence. It takes a lot of confidence to do this. Thank you, Jesus. All right, so I'm just gonna save all this for us to see that. So for this order now, our RR is 1 to 4 for this second one. It's a 1 to 4 weeks to reward, which is pretty good. Remember, the least we can do is 1 to 3, right? So our least RR is 1 to 3, so that we can have, even if we have losing trades, when we have winning trades, it takes care of the losers. That's the importance of having a healthy risk to reward. So even if you have a low win rate, your risk to reward will save you. Okay? Your risk to reward saves you when you have a low win rate. Your risk to reward saves you when you have a low win rate. So let's watch what happens. We have done our own. We have done our own. So now we are the early buyers. Okay, so why did we enter buy here? Because in the internal structure, we are seeing the Asia low taking one, and is now into our area of value of demand two. Those are our locations and confirmation. All right. Again, why do we enter the buy? We have seen that even if we have this little internal structure, Asian low has been taken as liquidity. Our location is our demand, which is the area of value below Asian low. Those are our two confirmations for buy. Asian low taking into demand, right? Then we buy as a buy limit. If you now want to wait for confirmation candlestick, you will now wait for a bullish, because as we speak now, bullish candle never form. It's about to form on 5 minutes. Can you see? Bullish candle is about to form on 5 minutes. See carefully. You can see this was a bearish candle. This is a doji. Now, for those that are trading candlestick confirmation, they will have not entered yet. For those that trade candlestick confirmation, they will have not entered the trade yet. They are still waiting for a bullish candlestick to form. But those that trade pending orders are already on the trade, right? And their stop loss is here. Is that clear now? So if you are waiting for candlestick to close, no problem. Wait on 5 minutes to see a candlestick close. Once that candlestick closes, you enter your buy and put your stop loss below. All right. Is that clear? Are we all in the trade already? This free signal I'm giving us, oh, signal that people pay $200 for, which I'm giving us for free. After this 100 days, right, I'm going to now put a price on our signal provision. But For these 3 months, let's just give free. Once it's going to the new year, you're going to put price a commitment fee. We're going to put the commitment fee on our signal provision. Asian range and daily candle close, not yet understand. Have you watched the video on Asian range? I've told us. Have you watched Mr. Idris? Have you watched Asian range video? If you have watched it, you should understand. Because the man simplified it very simple. And I've been talking about it since the beginning of this. That means if you have watched it and you should understand. It's only if you have not watched it, you will not understand. The previous day candle close. Okay, how many minutes do we have left? Let me explain that. I will explain previous day candle close in 2 minutes. But that Asian range, you have to go and watch the video first. Because there's no how I can explain that you understand. You have to go and watch the video first. But let me go to previous day candle. Okay? Daily candle. Let me go to daily candle. So now look at what I said when it comes to daily candle. I've said this over and over again. You have to know the concept first, okay, before you come to the charts. So daily candle, not just daily, say previous daily candle, previous. I've said this thing. It shows that you guys are not taking note. Oh. I've said this thing over and over again. I've written it out. I've given us the screenshots. I've said this over and over again. Please, oh, please. Previous previous daily candle, right? So I said that when we have previous daily candle, there are two ways. There are only two things that this what's happening now. So there are only two things that this candle can do. It can either close bullish or what bearish. Is that clear? Our candles can either close what bullish or bearish. Our candles can either close bullish or bearish. There is no other way again candle can close. And I said when it close bullish, you are going to map when it closes bullish. Please, am I sharing my screen because the network is lagging again? No? Am I sharing my screen? Am I sharing my screen? Actually, not showing. Yeah, so yeah, can you see my screen now? I need to wrap up. I need to wrap up. I need to do other things. I need to do other things. I need to wrap up like ASAP, ASAP, ASAP. This 1 hour 30 minutes already. Guys, talk to me. Can you see my screen? Okay, so let's just wrap up quickly. So I said a bullish when we have a bullish day, what do we mark? We mark the high and close of our candlestick. High and close. Okay. And when it is bearish, what do we mark? The low and close. Low and close. Right? That's the first thing we do. Now, so once we do this, then next we go to 15 minutes. So go to 15 minutes and adjust the rectangle objects because you're mapping with a rectangle, right? Adjust the rectangle objects, okay, to previous New York Open, previous day New York Open, previous day New York Open to next day New York close, right? So these are the two things you're doing. You're just mapping it and wait. You're not okay. It doesn't mean that when you get there you enter. It's just a location to know to give you the bias of what the day will do. So number one, previous day candle closes bullish, map the high and the close. That means you need to know a bullish candle and you need to know candlestick, how to read candlestick to know the high, open, low, and close of bullish and bearish candle. Okay, you need to read about candlesticks, right? These are what we do in the mentorship class. So, like I said, this is not a class to this is not a session to teach all these things, right? These are what we teach in the mentorship class. So since you're already in the mentorship class, we treat that in the mentorship. Is that clear? Yeah, so we treat it in the mentorship class. Let's not prolong all this. So we are done for the session. So let's call it a day. Thank you all. This is 1 hour 35 minutes. I gotta go. I gotta go. I gotta go. I gotta go. So watch the replay over and over again to master it well, right? Then we see tomorrow, right? On the call.